listeners, let's move on and let's connect with our technical experts then. And on the show, let me welcome Kunal Bothra as well. Hi, Kunal. Good morning. And tell us, how is this morning looking for the Indian markets? Because just yesterday, it was a bit of a day of consolidation that we were in. But today is a big event. How do you see the setup?
Yeah, the markets are going in with a much more stable trajectory. After a 1,000-point rally, we just went into 2 days of pause for the index, where the Nifty drifted back from 23,750, 800 mark towards 23,000, 650, 600 odd levels. So I would call it as a mild drift or a mild, consolidation between for the indices. What matters is the outcome, of today's policy and how the market reacts to that. So, for example, if it's on the positive side and assuming if the index breaks past about the 23,800 mark, we could be looking at a fresh bout of optimism as well as a trend coming back into the indices. And then we could be looking at much more higher levels on the upside, say 24,000, 24,200 could also be possible for the index for the near term. But on the other hand, if the markets get back into a slight bit of disappointment, you might probably expect the index to drift lower, and then probably this pause or consolidation which has been going on for the last 2 days, that may continue for some more time. The good part about the markets over the last 2 weeks is that there has been slew of large cap names which have played very classic in terms of the sector rotation as well as stock rotation. So even within a sector, if for example financials or banking, etc., you've seen the churn playing out quite well. That's keeping the market, breath a lot more healthier on a daily basis.
Right, Kunal, actually let me take the terms that Nikunj used yesterday, build India and consume India. That's the sort of trade that is panning out, where people are moving out of build India, going into consume India place based on the budget. What's your view when you talk about capex related theme and consumption related theme? Which side do you think is performing better for the longer term, or at least medium term, that you're seeing on the charts?
See, I think now what matters over here, Cheryl, is risk reward. I mean, if you're expecting the index to move up higher, if you're expecting this trend to continue, then you would probably want to latch on to sectors as well as stocks which are displaying a lot of favor or high probability in terms of risk reward. So I think in that aspect, maybe the FMCG stocks, the consumer side of the market, I think that could look a lot more attractive from a long-term play. Now, when you see stocks like HUL, Britannia, etc., correcting by 30-40% in the span of the last 4-5 months or so, I think that's anytime a very favorable kind of a risk reward to enter into these stocks. From the capex space, I think what we've seen is a slew of short covering for few select names. For example, you saw the likes of ABB, Siemens, etc., making a very strong comeback. L&T has been a stock which has been a bit more volatile, devoid of its nature earlier, which has been typically more low to moderate beta. So what you're seeing is just a struggle which has come back into the capex related theme. But I believe that the markets are now tilting towards a point where the risk reward is starting to look attractive for individual sectors, and that's where the money is getting flown into.
All right. So help us with the stock ideas as well, Kunal.
So I'll go with few buy calls, and the first one is from the IT pack. It's Wipro. A very interesting chart. The stock very gradually and slowly is moving back towards a breakout of its previous major highs around the 320 level. I believe that that's a sign of a very strong potential uptrend which could come back into the stock over the near term. 340 as a target for Wipro, stop loss at 308. And the second would be about HDFC Life. This could be a more of a surprise mover because the stock over the last many weeks and months have gone through a sharp correction. What we are seeing is a triangular pattern formation for HDFC Life, and the stock just marginally closing below its 200 moving average. So if the breakout happens above the 200 DMA, I believe that the pace of momentum on the upside could accelerate, and you might see the stock heading back towards the midpoint of that previous 100-point sell-off for HDFC Life. So 660 as a target, stop loss at 620.
All right, so those are the picks coming in from Kunal this morning, but let's